Hi everyone, good morning. It's Louisa. It's Friday. Yay. It was quite an interesting morning, and I'm going to take you through the trade. Today I took a trade that was 251 points, 18 RR. And if you were on my live yesterday where we did a market analysis, you knew that I was looking for a short this morning. And indeed, that's what I took. So the market was jumpy. I'm going to take you through some of the obstacles and ultimately what I was looking for as I took this trade. There were a couple of different ways you could have played this morning, despite the fact that the price was moving pretty quickly. So I want to start first of all on the 1 hour chart. Here is NQ on the 1 hour, and I'm going to strip everything off the chart so that we can focus on what is really important here. So if you haven't watched my live analysis last night on what I was anticipating for the market this morning, go and check that out because that explains very clearly what I was looking for. So as we have discussed, this side here, this is the market maker buy model. And we are currently in a market maker sell model right here. This is a 4-hour embedded candle on my chart here, and I'm going to refer to this a little bit later in the trade. It was a confluence. So I mentioned yesterday that what I ideally want to see is, if I'm interested in taking a short because we're on the sell side of market maker model, then I want to see Asia and London trade up and then have identified the manipulation sometime this morning and then take a short. And that's exactly what we got. And so here on the 1 hour, this blue vertical line here, this is 1800 hours. So that's when the market opened yesterday at 6 p.m. Eastern Standard Time. And we can see that these green candles here indicate the price just moved up all evening. I'm going to move down now into the smaller time frame, and you can see what Asia and London looked like. Let's see here. I'm going to make my screen as big as possible for you guys. So let me move this out of the way. Let me move this out of the way so we are only looking at price action. So this square here is Asia, and Asia just trended up. We we expanded above previous day high. Here is our Asia high. London moved up, and then we had a market pull back a little bit this morning, and then it finally had its kind of last burst before the sell-off. So let's go down. Let's go down to the smaller time frame. And before I do that, actually, let's go down to the 5-minute. You can see this a little better. Now, all of these lines that you see on my chart here, all of these levels, previous week high, week open, AM high, this is the AM high. We have London low, all of these. I used to put these on my chart myself, but I've been using, I pay $20 a month to use Cronus indicator, and there's 4 indicators that you get in a package, and I highly recommend because every time you open your chart, all your levels are done for you. So anyway, if you can cut the $20 a month, I don't get anything for recommending him, but it's just so much easier to have this on your chart every time you open it. Okay, so here we are. So again, here is Asia. We're just creeping up, creeping up, creeping up. Here was London's high. Then price pulled back, and here we are at 940, and here is the last low before the final push-up. This, I think, could have fooled a lot of people, that this could have been, traders might have thought that this low here could have been the manipulation for a move higher. And honestly, that would have been a pretty credible assumption. But if we're on the higher time frame and we can see that we're on the sell side of the market, what should be in our minds is that we should be looking for a short. So this was an example of if you're down here on the 1 hour and you're not taking into account what the higher time frame is telling us, this is how you can get, how the market can fool us basically. Now, I want to show you one other potential that ICT teaches. You can find examples of this on my channel. This is the Venom model. So we have this green candle move up here, and then we have this candle push down with great force. So we have this candle move up with a nice wick, and then this candle move down. That's the Venom model, and that's between 9:30 and 10 o'clock. So if you're curious about ICT's Venom model, you can either go to his channel and check it out, or you can look on my playlist and I've got some examples. Now, I don't trade that anymore because I have one model that I trade. If you go into the description of this video, I have broken down my model in detail by detail. So hopefully that will be helpful to you guys. Okay, so let's now move down to the 1 minute and get down to really where the move was. So here we are on the 1 minute. This candle, this last down close candle here, this was at 9:41. I'm just going to put that here. This was 9:41. This is inside the macro. So again, you would not have been wrong, except if you had focused on the higher time frame and started the morning thinking about being in alignment with the higher time frame. But we also had a breaker here. We had uh, a low, a high, a lower low, and a higher high. So we did have a breaker. So for those who were thinking, okay, price is going to go higher, I can completely understand where you're coming from there. The only thing is that we did not have an SMT. We did not have an SMT. Now, if you're following my model, we need that SMT as a confluence, right? We need a change in the state of delivery, which was here. And then we needed that SMT, and we did not get that SMT. So detail, 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 detail. Okay, so let's actually look and see why I took this trade. So this, anyway, I wanted to show you this, that for anyone who thought the market was going higher this morning, I can totally see where you're coming from. Okay, so let's now look at what time. This was at 9:50, still in our macro. And this was the manipulation here. Now, NQ took London high. I'm just going to move this out of the way, and we're looking at this candle here, this green candle here. That is the manipulation. So I'll just put maybe an M there. This was manipulation right there. And that manipulation was at 9:50 this morning. So right in time. Now what happened is, so we had this big push up, and then we had displacement down. I'll get to the SMT in a second here. This is where I entered the trade. This is where I exited the trade. Now on the 1 minute, when you saw this push down here, here was the BISI, and here was our, right here, a very small inverted fair value gap. We had a low, high, lower low, so that would have been our breaker. And then change in the state of delivery. This was the last push up, this green candle here. So there's a couple of places that I would have considered putting my change in the state of delivery. The first one is here, because this black candle is the last down close candle before this green candle pushed up. So that is one change in the state of delivery, but I think it's also reasonable to use this as a change in the state of delivery as well. Okay, like I wouldn't have blamed anyone for taking this change in the state of delivery and waiting for extra confirmation. Okay, so we have a low, high, lower, low. So there's our breaker. Here's our BISI. Here's our change in the state of delivery. And inverted fair value gap. Here's the other inverted fair value gap. Okay, so if you didn't want to take this one, you could have taken this one. This would have given you, a little more confirmation. Um, and then basically all we're doing is we're just moving down. We're just moving down the ladder here towards what we talked about last night, which is where we think that price is going. I'll just show you back on the 1 hour here where we had identified this is our ultimately on this sell side of the market maker model. This is ultimately where I think price ultimately is headed towards, right? So again, that higher time frame is really, really important. Now, one other thing I want you to notice about this, I always talk about this 4-hour candle, and I want to show you how powerful this 4-hour candle was. So first of all, with our model here, we had a manipulation. We took the highs. We had an SMT, which I'm going to show you in just 1 second. We had nice displacement down. We had a change in the state of delivery. We had a BISI. We had a inverted fair value gap, and we had nice strong candles, and we had a breaker. With all of that, you could feel pretty good about entering the trade. But here is the beauty of this 4-hour candle. So check this out. At 10 a.m., this 4-hour candle opens, and you'll often hear me talk about wait for that 4-hour candle to open because it's really quite telling. So this black line here, this is just an indicator. It's free. You can get it off TradingView. This black line represents the candle open, okay, the opening price. So candle opened, wicked up, then dropped, and then is going to close somewhere here, okay? It closes at 2 o'clock, which is when the next 4-hour candle opens. This wick, we want to enter as close or on this wick as is humanly possible. Consider this to be manipulation. Okay, so when I saw the candle open and come higher, so I'm watching this as well, right? So this tells me, okay, the 4-hour candle is opens here, climbs up. We can expect distribution to happen. Distribution is the body of the candle. So if you think of it as the wick being manipulation and then the body of the candle being distribution, once you ride this distribution, like this is where you're getting the majority of your trade, right? And so it was a beautiful confluence to what was already happening over here. So this was you can get this for free, this free indicator here on TradingView. It's the 4-hour indicator, and it also, you see the little red line here, that shows us where it sweeps on the 4-hour, which is really, really helpful. Okay, so let's take a look at the SMT now, because that is critical to this model. And I'm just going to open it up. I wanted to have very little on here. I want to show you the SMT this morning. Now, there are a lot of SMTs on my chart, but don't get confused with what was really, really important here. I'm going to open this up really nice and big. Okay, here's ES. This blue line here is London. ES swept London. Price came down and came up one more time and made a higher high. See how this wick is higher than this wick? So this SMT here is from like a down position to a high position. What happened over here on the same candle, if you can see when I'm moving my mouse over this green up close candle here, NQ took London high, came up here, came down, but did not take out this high. So this red line here and this red line here, this one goes up and this one comes down. That is your SMT. That was that was the kind of the big confluence to take this trade. Okay, so we had a number of confluences here. We had change in the state of delivery, SMT, breaker block, inverted fair value gap, displacement, the 4-hour candle, and the SMT. That's 7 confluences to take this. Always when you decide to take a trade, you have to respect your risk to reward. So whatever that is in your trading plan, you have to make sure that you have that parameter. You've got your starting point, and then you always want a 2 to, I prefer a 2 to 1 or a 3 to 1 when I'm planning my trade and thinking about where, where I think price is going to go. So you can use this short position here or this long position. My short position was here. I can tell you that my stop loss was, I think my stop loss was, I didn't put it above the swing high, but you could have, to be really, really safe, you could have put it there. And then I exited the trade down here. Where did it go? Somewhere down here. Anyway, it came to an 18. It was about there. That was 20. I think it came to, yeah, it was 18 RR. So it was a nice clean trade. The time that I entered was 10:01, so it was inside the macro. And the time that I completed the trade was 10:25. So 24 minutes, 3 contracts. It was just over $1,000 US with a very, very, very small risk. Right? These are the kind of trades that I'm looking for. I'm still using pretty conservative in my contract size. And I'm looking for trades where I can get these nice long runs, because then you get these nice RR runs with risk being, really, really small, really, really tight. I think my risk here was $100, maybe 125 tops. But that's a pretty nice return on investment. So in the description of this video, you'll find my strategy. I updated it yesterday, and I think I put in 6 or 7 pro tips, just additional things that I could think of. And one of the tips that I want to share with you today is the trade becomes much higher probability when both ES and NQ have a change in the state of delivery. Okay. And so when you have both indices, or whatever it is you're trading, when you have both indices having a change in the state of delivery, much, much higher probability. So everything completely aligned here. Again, for anyone who went high here, I completely, anyone who decided to take a long here, I completely understand where that confusion came in. But always go up to the higher time frame when you're doing your analysis on the weekend, and come to the trading table in the mornings with that firmly in your mind, what the higher time frame is, because more often than not, probability is going to play out and it's going to align with the higher time frame. So please like, share, subscribe. Sundays at 2 p.m. I'm doing a market analysis every week. And this week on Sunday, I'm going to spend 10 minutes going over a proper breaker, both bearish and bullish, and where you're going to look for your inverted fair value gap here. So I'm going to spend 10 minutes talking about that. If you have any questions about the strategy, bring it with you, and we'll discuss on Sunday. Okay, guys, have an awesome day. And it's Friday, it's the weekend, and there is nothing better than having freedom from being a trader. So talk to you later. Bye for now.